Okay, atamare, and good morning and welcome to our fourth webinar series built around resilience. Just to remind you, for those who have just joined for the very first time, BDO in New Zealand is running a Rethink framework, and it's all about looking at businesses as they come through COVID, moving from, we had a reset stage through level 4, 3 and 2, and we're now in a resilience stage and looking at how businesses building up resilience and starting to look at how they operate in this new world under COVID-19. Today, I welcome and am joined with Adrian Littlewood, the CEO of Auckland Airport, stock exchange listed. This is a great example of a business that has been significantly impacted by COVID-19 in terms of its sector that it operates in. And Adrian's going to share today some of his insights, where the business has come from very good heady days to a different state at the moment, the sector, his outlook, in particular to talk about resilience and how they as a business, which we all know about because of the tourism sector and its impact, how they have coped, faced the challenges and where they are at the moment. Adrian will talk for 10-15 minutes in his presentation, and then we welcome questions from the audience. Just so you know, I'll be looking at questions as they come through on my laptop, so don't think I am reading emails or anything. I'm simply picking up some questions to fire to Adrian. Please remember, it's a stock exchange listed, so Adrian will be cautious of clearly the questions asked, not giving out anything sensitive, but he is open to all sorts of questions and ask about his business. So without me going on any further, Adrian, thanks very much.
Thank you, and good morning, everyone. And thanks for the invite to come and chat. Certainly, we've been at the front of what's happened in COVID in the early parts, and then obviously in the response. So happy to share what we've learned through that period.
Thanks.
Look, I thought I'd just start by telling a bit of a story about what happened for us over the last 6 months, and then how we responded through that. But look, effectively, our story is pretty well known, given probably most of the people on this call are customers. I think 92% of long haul business comes through Auckland, and 75% of all international travel to our country comes through Auckland. So we've got a reasonable chance of servicing New Zealanders at some stage in any given year. And obviously, as your listeners will be well aware, where we were leading into the start of this year was really the combination of a bunch of pretty amazing things going on. We were going through a once in a 50-year infrastructure upgrade cycle, so planning to spend sort of thick end of a couple of $1 billion in the next 5 years, and probably another couple not long thereafter, on an upgrade of our infrastructure, which is all built in the late 60s and has had various upgrades over time, but was facing, with both the age of the assets and both the rapid growth in passenger volume over the last sort of 3 or 4 years, a need for both capacity and replacement to almost reset the entire system.
So it's $4 billion over.
Yeah, so we were in the next 3 years, we're planning to spend 2, and probably another 2 not long thereafter in a couple of years. So we were probably literally the biggest development site in the country, I think, and that's setting aside all our commercial property work and all the other work that was happening around our precinct. So thousands of jobs, investment and productivity, which creates economic activity, and then the benefit of that infrastructure once it's delivered. So, a really positive story. And I can tell it wasn't one without challenge, because we were attempting to do an awful lot at the same time. And just to that growth point, we had gone from 15 international airlines to 30 in about 2.5 years, and passenger growth had been sort of compounding at sort of somewhere between 8 to 10% a year off a fairly large base. So, good story, and a good, example of growth, creating the incentive and the imperative and the ability to fund very large public sort of and private infrastructure investment. So that's where we were going into January, and I remember going into the January interim results, which feels like a distant memory now, sort of talking about that plan and how far we'd come. We had I think probably about $500 million of works underway. We had just announced the initiation and enabling works of the new international arrivals terminal with Hawkins. In the same briefing, we had announced the initiation of the Vertical Construction Alliance, which was one of the first ones for vertical construction in New Zealand, with Fletcher's and Hawkins for the new domestic terminal, right. As long as 200 other projects around the precinct. So that was February, and so in the February results, we also talked about COVID, because COVID had started to raise its head at that stage. And if I think back, and I went back and checked my text messages that I've been having with some of my friends in China, and we'd already had that sort of clue that something was obviously going on. It had raised its head in Wuhan, and some of the flights were starting to get restricted. And in late January, I had a text from a friend of mine who works for one of the very large Chinese tech companies, and he said to me, what are you doing in New Zealand about this virus? We've gone on to complete war footing. We've rolled out the SARS reaction plan. We're really getting into it. And so I rang around and spoke to a few officials. They said, no, it's all good. We've got a plan. We're monitoring it closely, but there's no need to react. Okay. And so we've been sort of aware and sort of acting on this, and we've been keeping in contact with our Chinese airline customers. And at that stage, they were starting to say, look, Wuhan's shutting down and it's closing down, as everyone knows. But the reaction really hadn't started to play, and then it sort of cascaded from there. Right. And in the following weeks, I then started to get calls from quite high-profile New Zealanders. It's called high net worth people who have also operations overseas, who were saying, I've just got a business in contact in Italy who's just gone into a coma from COVID, and this is really, really serious. And I think at that stage, New Zealand really wasn't getting its head around it. And again, it kept cascading week after week. And then we had obviously the Chinese flight ban, then Italy, then Iran, and it just sort of flowed from there. And I remember sitting in a couple of ministers' office in would have been mid-late Feb, where we were giving them the download on what we were hearing from the Chinese airlines, and I was saying, this is really starting to get big. And it was easy to see that with what was happening and the path that New Zealand was on and the rest of the world was on, that this was going to lead to some pretty dramatic circumstances. But I guess no one could foresee what was coming. So I guess as we went through that mid-Feb and then into early March and then late March, when really things did completely shut down, I guess we were in this almost daily and hourly cycle of gathering new information, getting new instructions, and I can tell you it was a scramble, right? Because information was flowing daily. We initiated our crisis teams, I think in mid-Feb, in a sort of a early Feb, in a sort of shadow mode, and then formalised that, I think mid-Feb, and then we're basically running full crisis mode from there on in. And it was, pretty exceptional, because we had people both trying to get back to New Zealand and trying to leave the country. We had governments working with limited information, partial information, and I think that was a great example. Actually, from our point of view, we're on the ground. Our partners, airlines, ground handlers, border agencies, we worked so well together in that crisis situation, but we were dealing with quite imperfect information at the time. So then fast forward to March, and we were in full lockdown mode. We basically went from business that was probably reaching annualized 22 million passengers a year to annualized of 0. And we had only repatriation flights leaving the country, and almost no other passengers going through. We had everyone working remotely other than our key operations staff. And then we were facing down the barrel of a multi-billion-dollar capital program, chugging along. The $2 billion debt book sort of staring us in the rearview mirror. Very highly complex and operations with very anxious passengers. At the same time that suddenly, the whole country was locking down. So then, we had to shift our approach pretty quickly and move into a mode where we were suddenly trying to wrestle with, what does this all mean? How bigger decisions should we make right now? What should we push out and defer? and where does that lead us to? And really where that led us to was, stabilising the business. So you mentioned before, respond and recover. That our response mode was very heavily in dividing up into operations, classic strategy, and then business resilience. So our strategy team were very focused on what does this mean for the future? What do we need to think about for our long-term future? Our recovery team and business response team was thinking about what do we need to do next week, next month? How do we pay the bills? Where do we put our staff? And our immediate operations team were basically focusing on day of operations. And I have to say the team did an amazing job under very trying circumstances. And so where we ended up was, after a fairly dramatic period, and during level 3 and level 4 lockdown, or as we accelerated into level 4, was a decision to hit some pretty big buttons for our business. Yeah. And some of those big decisions were to suspend or terminate our multi-billion-dollar capital program, not in total, but in almost total, and I'll talk a bit more about that, to take that cash burn out of the system. We had to immediately go to cash burn mode and build a cash flow model for our business, which for a business like ours, with the enormous capacity we had for borrowing and operations and the cash generation we had, was something we probably never had to do before in 54 years.
Yeah.
Suddenly we had to have a cash flow model, find out where the money was going every day. And then as we terminated projects and formed a strategy around that, we went to securing the business for the long term. And we initiated, and I was saying before, entirely from home over Teams and Zoom, the largest secondary equity raise in New Zealand history, and we raised $1.2 billion through a mix of placement to existing shareholders as well as private placement, and successfully raised that money 3 times oversubscribed. Wow. And that really gave us the ability to then look out at the future and say we have security to manage any number of recovery scenarios and have the resilience to get our business in the right shape to see that through. Now that involved not only raising a ton of equity, but staring down and renegotiating the longest ever US private placement covenant waivers in US private placement history globally. And at the same time negotiating the same waivers with our domestic and Aussie lenders to say you will forgive us our covenant waiver tests for the debt book that we hold and stay with us through the recovery. And so the combination of the equity plus the debt covenant waivers gave us that comfort to see through whatever recovery looks like. And then we had to deliver on the promises we made through that process. So we've cut our team down by about 30%. We've taken out costs where we could and set our business in a recovery-ready position for working on that response when it happens. And we immediately also turned our mind to how do you safely restart international markets, because for us that's critical. It's also critical for our country. And I keep saying, complex problems require sophisticated answers, and I have the attitude that every day matters, and we should be investing every day we possibly have as a country to try and figure out how do we live with this in a safe way, but then also how do we gradually reconnect to the world in a way that preserves that safety and doesn't sort of jeopardise the price we've paid for securing our country, but at the same time doesn't leave us as the North Korea of the South Pacific and isolated from the rest of the world forever.
You just said you went from 22 million passengers to 0. So that's revenue from whatever your top line revenue is to 0, and yet you're reforecasting, but it's all about cash out by the sounds of it. It's
cash in, cash out. That's right. And we had a scenario where all of our normal customers were unable to pay. We're not carrying passengers. We're a pay-as-you-go model.
Yeah.
Airlines are carrying passengers. They pay us for every passenger that moves, every plane that lands. And suddenly that evaporated. Our retail partners equally had no passengers. We're not able to sell.
Yeah.
So one of the risks we had, we would end up being the meat in the sandwich. We had certain airlines, and happily not our home carriers, being very diligent, who were treating airports like banks and refusing to pay because they had their own liquidity crunch. So we literally had hundreds and hundreds of customer relationships we had to work through and decide was this a relationship where we, had to swallow it ourselves and take that hit ourselves, versus should we be holding the line because they're having a go? Because actually, in the post-COVID world, that business is going very well, and some have gone incredibly well, and they should be, paying their full rent or whatever it is. And so we had to go through literally line by line on that model, again, all done remotely like everyone has been doing, and manage our way through that.
Wow, okay.
And we're lucky, I guess, in a way, and this goes to, credit I have to pay to our successors, our predecessors, sorry, and the work our team has done over the last sort of few years, is that, while we lost our entire travel-related business, which was 90% of our business, we still had a 10% of our business, which was our commercial development property business, which went from being about 10% of turnover to 100% of turnover right, in only a few weeks, and has been incredibly important for cash generation. So it's an $80-odd million a year business, and has been absolutely vital for us. And just keeping some money flowing through.
That commercial property is what the hotels and the likes that surround.
Well, no, it's the couple of hundred hectares of commercial development, both vacant land and developed land. Probably, portfolio now currently valued at about $2 billion on its own.
Okay.
So on a standalone basis, we're probably already one of the most active commercial developers in the country. Just people don't see it because it's you pass it by on the way out to the airport, and so we've been building, for example, Foodstuff's 75,000 metre DC and their 9,000 square metre head office out there, which will complete shortly. So they're really grade A industrial and commercial property. There are also 2 hotels, actually already in existence, and 2 more that we're building. And I mentioned before we had to stop this multi-billion-dollar infrastructure program so that we can choose when we restart it.
Yeah.
But we've had to continue on with those 2 hotels that are being built to a point where we close them in and can protect the structure. We won't finish the project at this stage, but we have to make those hard decisions. So when you're in a cash burn mode and you're having to make those calls about what can you stop, swallow the termination, versus will you have to continue burning cash because the alternative of shutting it down and exiting that project actually is more expensive. Those are the tough calls, and we had to confront that on every one of the couple of hundred projects that we were running at the time. So they were the tough challenges.
Just you referred to you broke the business down into a strategy team, an operational team, a day by day, but you also activated, by the sounds of it, very early, your crisis team. Did the crisis team sit above that? How did that actually work?
Yeah, essentially we have a sort of well-travelled crisis management team structure that essentially puts everyone in the organisation, including me, into particular roles.
Okay. So
as many of your clients will no doubt know, that in a crisis, in fact, it's quite hard, depending on the size of your business too, for the CEO of a major business to be running the day-to-day, because you're frankly dealing with all stakeholders. It could be government, it could be media, it could be regulators, it could be your board, stock exchange. All these things are all happening at the same time. So in fact, and under our structure, I get set a task, my phone gets taken off me, that gets handed to our team. And I simply have to play that role for spokesperson for the organisation and interface between those different points. We then set up a crisis team, and they basically, all of our team executive and all the roles in them form into their particular roles, and we have those prescribed, and that puts the business into a sort of a parallel operating structure, which reflects the fact you're in a crisis.
So effectively, you're not really running as a CEO. You've been given an operation which, because of the size and the significance of your organisation, I'm assuming yours is more a communication piece to the regulator, to the government, to
all of those
shareholders.
Things. Yeah, and I just think that's the reality of a crisis like this, and we've been through this before with the fuel crisis. So we get to the fuel line was cut.
Oh yes, I remember.
So we get plenty of chances to try this out. But I think that's just a reality. If you have a crash, an accident on an airfield, it is an all-consuming event, and so normal operations need to stop. Now, the reality is, as a leader of an organisation, you're always keeping close to whatever's going on, but you need to be able to allocate and divide up those roles very quickly. Otherwise, frankly, the organisation will grind to a halt, and the kind of agility you need to respond will be lost if you're trying to treat it through the normal processes you might run.
Right. And sitting back, your crisis management plan you've used before is successful because you're here today and things are still running well.
Absolutely. And look, classically, I think all good plans look great on paper until they put into practice. And I think that's where the calibre of your team and the support you get from your board, the relationship between the chair and the CEO, I think is fundamentally critical. And I think it changes a complete gear in those kind of situations.
Yes, to talk about that.
Yeah, look, and I've been very lucky that I've had 3 outstanding chairs in my time, and having been a board member in different organisations as well as an executive, that relationship is so important. But you've also got a board of people who are highly committed to an organisation, have incredible skills to bring to bear, and so the chair needs to play that role of helping to coordinate the board, make sure those skills are put into the right place and put to work well, that the CEO has someone to constantly bounce ideas off, and that interrelationship is incredibly important. And I personally find it just super valuable because at the CEO, you're at that interface between the board and your team you're managing, and often you don't, you're confronted with some fairly big decisions and with imperfect information, and to have that relationship with someone who has a bit of separation from the day-to-day, who can test and challenge and also reflect back what other board members might be saying, I just find incredibly valuable. And so that back-to-back arrangement, I think, is just vital for normal functioning, but also particularly in these kind of situations.
So did you find, does the board step up for you, like in that time? Did it meet more frequently? Did the interaction occur a lot more?
Oh, absolutely.
Right.
I think there were moments there. Obviously during the equity raise, we were meeting multiple times a day, but absolutely the frequency completely changed. All our normal routines, our practices, our products, our papers completely changed, and some things permanently, which is good. And the sheer act of just having people around the table, understanding information, hearing what they're hearing, given this is a national crisis, and again, we're fortunate with a very, very experienced board who have knowledge and experience from different parts of our country, all brought that in to help with that conversation. They will bring different skills as well. And we're also fortunate we have international board members, so we have people from offshore living in Australia. So again, that international perspective also helps, so you're not New Zealand-centric.
Yep. One thing we've been telling our clients through this period is to forecast, reforecast. I'm assuming similar. You guys are constantly, you don't have a lot coming in other than your capital raise, but are you constantly reforecasting, looking at your numbers, thinking this situation changes this scenario, and keep running out what those numbers look like?
Yeah, look, absolutely. And naturally, when you're going into an equity raise, having something to, structure around the sizing of that raise, the message you're sharing back with investors about what that outlook is incredibly important. And to me, in this situation, it was hard because no one really had any answers. So, for me, I always go back to fundamentals, core principles, things that matter around the quality of our asset and what we talk about with our investors. But then also just to explain some realistic scenarios. So for the equity raise and the sizing of that, we did test ourselves pretty hard and said, look, we have a range of 3 potential recovery scenarios, but we also had a scorched earth test. And we basically said, what happens if the current situation, which is about as tough as you could get, continues on for an extended period? What does that mean you need to see your way through any range of scenarios?
Right.
So, and I think that gave confidence to our investors, who were able to see that under quite a wide spectrum of potential outcomes, we were able to see our way through. And also we could explain how we would operate our business, what action we would take to respond to that. But we were also really clear that there were some things that we would continue with. So, and this is important again. So we were already quite clear we would be cancelling a lot of projects. We were clear on even though it's hard to be clear in some of those circumstances around what that would cost us, we're also clear with what we would be continuing with. So we chose to take the fact that there were no planes landing, basically to pull forward probably 4 years worth of works on our main runway, continue with a fuel line, continue with some roading projects, because those are hard things to do, and when you've got nothing happening, that's a once in a 50-year event or a 100-year event, so you don't want to waste an opportunity. So we were able to explain that context and give them confidence that even despite that investment, we were able to see through a very dramatic scenario, and see and have enough to do.
So your resilient stage that you're currently in, well, I presume you agree that's the stage you're still in. You're actually starting to invest still. You've turned around, said you've turned off some of that capex, 2 billion, but now actually there's an opportunity, and you're investing in.
Well, so we're investing in resilience. That's number one,
right?
And I think those things, are non-negotiable in this context. You got to do those core things, and we isolated those very quickly. Secondly, we are continuing with some projects where we had commercial commitments we had to complete, and those are some of those commercial properties, or where the cost of exiting the project at this stage was just outweighed the cost of cost of continuing was better than the cost of exiting. That's why I said closing those hotels, getting the producer warranties or statements on those, means that we can restart those at the right time. But beyond that, the challenge for us is then when do you restart the infrastructure plan? And for us, things like we want to be able to start the domestic terminal replacement as soon as we can. Judging when that recovery has happened to a point where we're able to do that is the hard thing, and when the airlines are going to be in the position to say yes, we need that.
Yeah.
Because right now we have an airport with roughly 20 million passenger capacity and a handful of people travelling through it. That doesn't change our need to invest for the future, but it's just picking the time when you restart that, because given the cash burn rates on some of these big infrastructure projects are so high, if you misjudge that timing, you can be in real strife very quickly.
Yeah, that's interesting, because it's a question here that's just come in from Nick. Given your current earnings capacity and the availability of cash from the capital raise, how long can you go in the current mode? But I suppose that's part and parcel of, well, looking at that forecast, reforecast. But
yeah, so and we were clear on this. We could have gone through almost zero passenger growth for 2 years with the raise that we did and the waivers we had. Now, good news is it's already been a little bit better than that. So the fact that domestic got restarted in July was helpful. The problem is it stopped again in August, and it's only creeping back in September. So already things are a little better, not a ton better, but there is no question we will have to see some consistent starting again in those markets for that to be better than our forecast. But I'm pretty confident that we'll get there. The good news is we've got the capacity to see our way through basically a level 4 lockdown for 2 years.
Wow. Okay. There's some confidence, Nick. This question, thanks for sharing your insights. This looks to me like someone who's got some cargo out at the airport. Can you explain what's happening to cargo before, during and after lockdowns and the impact on your business?
Yeah, well, cargo is an interesting one for us because we actually don't participate in the chain other than as a landlord for the ground handlers or the handlers like DHL in New Zealand and others. And essentially the planes fly in and out, and we don't really understand. We don't get a lot of insight, unlike passengers, into what's happening. But the headlines on cargo are that because about 80% of, I think, the air cargo that came to our country came in the belly hold of passenger planes, because the passenger planes, the passenger planes have evaporated, there's been a real crunch on capacity. So what's happened is the government has done the right thing and actually put some subsidies into airlines to encourage them to fly planes without passengers, but cargo underneath it. So we're having a lot of sort of ghost planes coming in with no passengers on board, but cargo.
Right. Okay.
But I still think we're probably down at least 25% in terms of cargo capacity into the country, if not a bit more. And that's why cargo prices have shot through the roof. So it's times like this where we, for years, have been talking about the importance of air connectivity to our country. That's only when the line gets cut that people start to realise how it affects the entire country in terms of import and export and the carriage of goods through into our country. So At the moment, we still have 9 international airlines flying in and out, which is great. Some of them are hanging on by the skin of their teeth.
Yeah.
And need to, and it's one thing we have to solve, is how do we start safely restarting markets for passengers over time, because those airlines can't really run on cargo forever.
No. Just want to touch back on a point we're talking about, the board, and again, for a lot of our clients, BDO's client base is predominantly mid-market, and for some of our clients, the board is made up of the executive directors as well. They're in the business. Yep. And they are also the board members, and so they don't always have the luxury of what you've got, that sounding board, that step back, that most probably independent, but also someone who's not in the day-to-day. Learnings that you most probably would put to some of our clients?
Yeah, look, I just see it as it's completely vital that, you know, and again, this classic diversity of views and opinions, I think, are just so important for better outcomes. And, you know, I can tell you right in the depths of what we were dealing with, particularly in March and April, you know, just a bit of experience from, you know, past generations, might be, you know, an experience had 20 years ago by a board member in a different country, in a different context, just sort of gave us a sort of a check or a sense of, oh, actually, we'll go back and retest that. Yeah. Or, you know, we'll push a bit harder on some of those assumptions. And I think the scorched earth example I gave before was a good one. Yeah. You know, we had a long discussion around how do you test the boundaries of what you know, how you size this up. And I think through the discussion between the board and the various experience, you know, we all agreed it was really important to set a tough threshold for ourselves, or a tough measure for ourselves in terms of what we could see our way through. Right. And I think that only came through the benefit of that kind of conversation between executive and board, and that separation. I mean, I think as executives in your business, you always have a natural affiliation and alliance to your business plan, the strength of your business, and the belief in your people to sort stuff and get it fixed. But with someone who's a bit just one step removed, who can ask those hard questions and say, just imagine for a second, what if that doesn't come off? What happens if it doesn't fall your way, or these 3 things happen? You know, how would you act then? I just find it vital.
Yeah, so you're an advocate for that independent, which I have been. Your sector, and we've got a number of clients in the tourism sector. This is a sector that, and everyone keeps talking about pivoting businesses, changing business models, but this isn't really a sector and a business model that you can just pivot and suddenly change. You're constrained.
Really are, and much like the rest of our colleagues in the tourism industry, you know, it is super tough and sort of tough for many of them, because, you know, they are a single sector business. You know, for us, the thing I mentioned before that I'm very thankful for is the development of our commercial property business. That has given us cash flow that would, had it not been there, we would have been close to zero, basically. And that gave us some comfort and confidence in our future. So it's very hard to pivot in that context. And really the only thing you can do is move as fast as you can to set the business and focus on cash and focus on where you need to go. You know, I think in some circumstances, and I know many tourism businesses have had to do this, is to shift to hibernation. Now, some of them know how to do that because winter is often a quiet period for them. But you know, I also know that, and I sort of feel an obligation to try and help from this point of view, that summer is time when they make their money, and if we can't, you know, do something to start markets, domestic ain't going to carry it through for some of these businesses over the summer. Domestic tourism, that is. So you know, we feel it pretty acutely. So yeah, it is quite hard to pivot on. You know, so I think cash, focus on the cash. Shore up your funders, your lenders, you know, your balance sheet, and then, you know, really understand what's at the heart and the core of your business, and go to your core as fast as you can. I reckon is the other lesson in this. You know, and it may pull forward things that you thought you might have to do in 5 or 10 years that may suddenly become the thing you need to do immediately.
So that's the investment side. So because in that whole reset stage, you look at your cost, you pull out as much as you can, but you get to a core that you can't pull out any more costs. But now when you look at your cash flow and you, as you say, you can't pivot too much in this sector, you must, or I presume you are looking at opportunities. You actually, and you're lucky now, you've 1.2 billion cash raise, so you've got some equity there. But do you look at opportunities as well and go, well, actually, we can invest in some stuff, whether that's technology, digital, or whether that's some other opportunities?
Yeah, and unfortunately, none of them really get you anywhere close back to where you were. So I treat it in a couple of ways. One is again, without wasting a day, what will it take to to recover the business and try and get it back to some degree? And so that's why, literally right from March, I have been and our team have been working on, how do you safely restart markets, because this is going to be hard and it's going to be choppy in terms of the recovery, but it will be complicated. But we have to spend time to figure that out and help the government to do that. So that's probably number one. Number two is to figure out what you can do with what you've got. So obviously a property business, but secondly, we had for years been investing in online and digital tools and channels for our retail business, and we were one of the earliest airports to do full click and collect. And it was the decision we made years ago. We said that's what customers want to do, so why aren't we doing it? And so we decided to do that and spent a lot of money on setting that up. Now we've just changed that and said, well, that was all focused on international. We've now just, and we'll launch in the next couple of days, a click and collect version for our domestic travellers.
Okay.
So you'll be able to pre-order stuff and have it delivered to the airport, whether it's for convenience, you just want to pick something up and have it there, or you want to browse and buy a gift on the way down to see your family down country. Again, it's not gonna make the day for us, but it allows us to accelerate things we were already planning on doing and pull it forward. So small things like that, but pivots of the scale that suggest you completely change your business, I think, are quite difficult if you're very industry focused. You can only really go to the skills and the core capabilities you have and figure out what that means.
One thing before I go to a question, you did comment to me earlier, is actually understanding your customers and that relationship, and having a really good customer database was huge.
Yeah, totally. And interestingly, 10 years ago, we didn't have a single clue who any of the travelling customers who came through the airport were. And gradually over time, we've invested in building digital, again, tools to build loyalty schemes. So we have the Strata Club, which is like a Air Points type scheme, rewards people for spend in the car parks and the shops, gives you access to our VIP lounges, our valet car parking product, and that's gone from 0 to sort of 300,000 members, and makes us one of the larger loyalty schemes in New Zealand. And that also gives us an insight into how people are travelling, where they're travelling, allows us to cross-sell and cross-tab.
Wow, okay.
And people may not know, we obviously have 2 hotels. We're planning to have 4 in the future. We also cross-sell insurance and car rental. So we're building a whole consumer platform in a way that 10 years ago was just way beyond our imagination for an infrastructure company, but it's something that we can do in the modern world.
In some respects, a number of years ago, you pivoted from just being what people might think as an Auckland Airport Authority, people coming in, going out. You are quite a few other things.
An economic hub of activity, yep.
Question from Scott. What is your best case for when international borders begin to reopen? Not sure if base should be actually best.
Yeah.
Look, $1 million question.
Look, what we've been saying to investors is, look, I think realistically, it's better to be conservative at this stage rather than unduly optimistic. And I think, at scale, probably, Q3, Q4 next year, which is, calendar 1 or 2, Q1, 2. So somewhere before July, June next year.
Right.
Now, it is possible it could happen earlier, and I think we got very close with Rarotonga, and Rarotonga's not going to win the day either. But that is still, possible, subject to the pattern of the outbreak here this side of Christmas. And depending on what happens to the politics in Australia, you might see the Prime Minister of Australia try and nudge to have something happen before Christmas. I still think that's difficult. And if you look at the politics in Australia, that is very difficult state to state at the moment.
Yeah.
They don't even have the states open yet. And for Australia to open to New Zealand, my presumption is that would be federal Australia, not just us state. But you never know. So I think it's safe to assume, again, be conservative and assume sort of before the midpoint of next calendar year. And if we get it earlier than that, that would be great. I should caveat that by saying we are obviously not wasting our day to try and help to make that happen, but it is a government decision, and that really comes down to their risk appetite.
Yeah, and I don't, we're seeing that anyway in the challenges in all the sporting codes who are trying to either go over there or invite people into this country. It's not as easy as people think.
Well, and not only that, the social connections, and we constantly field inquiries from people who are desperate to. I know, some people who've been separated. They've taken a job in Australia. Their family's here. They're trying to get back, and they haven't seen their family since February. A lot of people have grandkids or kids or parents. Some of them may be getting married or poorly, and those are really, really, quite visceral issues for people. And so I think we should be aiming to connect our country, particularly with Australia and the Pacific Islands, given the Pacifica community in our country. And for us, it's important because if you just made domestic New Zealand, Australia, and the Pacific Islands working again, that was 75% of our business previously.
I mean, I presume you and Air New Zealand are closely linked, and it's big collaboration time now for people to work. Air New Zealand, I think, have actually said they don't see flights getting back to the scale that they had pre-COVID till about 2023.
So we've been saying the same thing. Right. So while I mentioned sort of restart, full recovery, I reckon there's a real chance it could take sort of 3+ years. Wow. And it's simply because I think there's a lot of focus on vaccines. I think that will be a choppy experience, and in fact, we've been saying that for months, and we've just seen that yesterday with the Oxford vaccine suspension and stage 3 trial. So I expect that will be the case. You may see early vaccines efficacy rate being low, and that will take years to unfold. So actually, I think testing technology is the catalyst for restart, and I think we should be urgently looking for answers and asking our experts, health experts and others, to lay out what that path looks like, because I think if you can get rapid and regular testing, like you are seeing in some places, Chicago, I think University of Illinois is doing this. A couple of days test, you have an app on your phone which allows you to record the results of that. You carry around your status, and that allows you free access and entry to different places and travel. That has to be part of the answer, and that's why it's sort of vaccines, it's treatments and testing. It's the full suite that actually is the answer, not just a blind hope for vaccines.
Yeah, as someone reminded me, I know it was years ago, but it took 5 years to get a vaccine for measles. Now I know we're years ahead in science and technology, but I don't think it's just going to happen tomorrow. Yeah. Question here. How flexible are your expenses? When Auckland was at alert level 3 in recent weeks then versus level 2, are you cutting cost out or have you actually cut out all your costs and really you're at that base?
Yeah, look, we have cut pretty aggressively, and both as a connection to the growth or the lack thereof, or the volume related expenses that have come down dramatically. Obviously, we've had to cut heads about 30%, as I said, or 35%. We've done that, and it's been tough. And we had to do it in waves, and it's taken months to get through that and do it in a dignified way. And we've now got to a position where I think we're at a cash burn rate that sees us in line with what we said going into our equity raise. But we've pitched it as recovery ready. So we know the minute a market starts, like domestic or international market starts, we need to be ready to service that.
Right.
And so we've held sort of additional FTEs, staff, to do that, because we don't want to let all that IP go. We want to keep our core infrastructure team there, who are now working on the replan of when do we start these projects again, and core operations. So yeah, I think we've done everything we can, and any new costs that come through now will be a net contribution, because it'll be pulling through revenue.
Here's a question on your commercial rental, which seems to be becoming a major and main source of income. Will this mean the business look to expand this side of your business?
For sure. So we've got a long-term plan. Investors in our business will be thrilled to know we have 200 hectares of developable land left to go. So we are probably the largest single development site for commercial development, 22 k's from the CBD. So you have to go a fair way south or north to get sizes of sites of that scale and size. with the connectivity and the amenity that we have. So I know from our institutional investors, it is one of the most interesting things from their point of view. And like any classic asset portfolio, it's a develop and then repurpose and upgrade to highest and best use over time. So it's not a finite thing. And in fact, we are already starting to demolish and repurpose buildings in the 1970s that were once distant from the beachfront of the airport and now front door, and now need to be relocated further away.
This sort of leads into the next question. It's interesting to hear that your capital development has been a lifeline during this period. What was your motivation for having this segment in the first place, as it normally pays to stick to your core business? Well, I think you were saying to me earlier, actually, you hadn't looked at assets infrastructure for about 50 odd years.
Yeah, that's right. And it's important to look at it from a 50-year point of view. So the land holding that the airport has actually is ultimately all there for aeronautical or transport purposes longer term. So you might actually think of all our commercial development as very long-term interim use. And so it generates a cash return from the land holding, but over time could be repurposed back for aeronautical use. And I just mentioned some of those. There are some buildings now that are being demolished and set aside for future aeronautical purposes, and so that is a very logical and rational thing to do, and it means that we can, as I said, generate a return off that rather than just having a holding cost on that, and then also have good purpose for that land while it's being held for that potential future use. Now, some examples of future uses could be vertical takeoff and landing personal vehicles, otherwise known as smaller helicopters, which are obviously an emerging thing. Probably has a role, I think, in inter-urban rather than long haul or inside city plays, but will require space, require airspace for navigation and other things, and so to have that land available is incredibly important. And that land can't be remade once it is chopped up for other development. So having that contiguous land holding is incredibly important for the airport long term.
Does drones go into that space?
Well, these are large drones, and
right.
Otherwise drones we don't like because they are very dangerous for aircraft movements generally. But yeah, these are personal drones. These are potentially the future of urban or intra-urban navigation. And as a hub, economic hub for our city and an international hub, connecting in is part of that. So those connections are very important.
So is this sort of similar to the Heathrow London airport city hop, where you can actually get into Heathrow and then instead of railing or cabbing, you just get a helicopter bang straight into
and so you could see the tops of buildings, the top of car park buildings in the city becoming transit hubs. Certainly Uber Air and others have plenty of concept designs around those kinds of ideas being built into the urban landscape in the future, but naturally airports are a major connection point for that kind of activity.
So you become quite central. So I suppose coming back to that question, your strategy has to look more than, given the fact that land is so important and the ability to move around, your strategy must probably, I don't know, goes out more than 5-10 years. It's got to look.
Well, yeah, we have 30-year master plans. 30, right. And actually, by the way, this is the thing I think every city in New Zealand needs is a 30-year master plan of merit. It's one of the biggest issues holding back our country, in my view, but along with tax structures, but regional and central government structures. Because it stops investment happening in the right way. But yes, we have a 30-year master plan that lays out the long-term plan of our airport. We did that last and majorly changed it in 2014, and that saw us out to 44 million passengers. And we're currently, close to zero now. We're at 20 odd. So I often say that if you look at Heathrow Airport, 2 runways, 3 terminals, 1,200 hectares does 80 million passengers. We have 1,500 hectares, we'll have 2 runways and 1 integrated terminal in the future. We have oodles of capacity for the long term, which is a really important thing to have. So yes, we have a 30-year plan, but in the context of probably 100 plus years. So
if you look at that 30-year plan, just interested, do you have the discussions then with Auckland Council, with Auckland Regional Council, with Air New Zealand to say, this is our plan, we need to collaboratively link in and work together?
Absolutely. And in fact, when we did the 2014 plan, we tucked it in behind the unitary plan. So the energy plan of Auckland was actually, I think a good example of what I mentioned before, where an urban authority actually took a 30-year view on the city,
right?
And for us it was quite logical. We'd always done master plans, typically 20 years, but we said no, this is the right time for Auckland Airport as an important part of Auckland City to match up its plans, particularly when it goes to urban development, around housing development. We want to be really clear about runways because it obviously emits noise. We need to be really clear to those future residents that there will be a future runway here. Yeah. So we don't want to have future NIMBY issues causing or preventing critical infrastructure from being built. So we felt it was the right thing to do, and so it tucked in right behind the city plan. So
conscious too that our audience is up and down the country, so Auckland, we're just on Auckland clients here, Wellington, Christchurch. Does Auckland Airport have a similar discussion with Wellington and Christchurch and Queenstown, other airports?
Certainly Queenstown, because we own a part of Queenstown Airport.
Yes.
And so but they have their own board and exec team, so we're a long-term shareholder there. But look, certainly from an airspace and air navigation point of view, yes, I think there is a coordination there that happens usually through the Ministry of Transport on that point of view. But the principles are similar and the same. And I guess as the hub for the country, we probably drive a lot of that traffic that happens down the country too. So that interplay and that interface between their long-term plans and our long-term plans naturally do match up.
Right. And I suppose something for our clients to think about, particularly you've outlined that you've got a 30-year plan and you're working with other strategic partners in collaboration and alliances. Is most probably our clients thinking further afield in their strategic planning is most probably collaboratively working with their partners and looking at their plans and having a more robust discussion.
Yeah, and actually that's one of the lessons we found out the hard way through the last couple of years of trying to turn our master plan into deliverable projects when you've got probably over 100 stakeholders and probably 20 or 30 core ones, is how do you coalesce all that around a plan and avoid the roundabout of decision making or interfacing? Because when you're making billion-dollar bets on projects, you want to make sure it's right, and you have a scenario where we have a 10, 20, 50-year view. Airlines, and I'm not being unfair, but maybe 5 years at a stretch, because simply the way their business runs, it's much more dynamic. They have much more flexibility in their capital asset management, so they can lease planes, buy planes, sell planes.
Yeah.
We buy it, it's there forever.
Yeah, it's on the ground.
And then you've got government agencies who work on a different cycle, and then you've got travelling public. So you've got all these different views, and how do you reconcile that? And actually, one of the things we've done, and I think there's some clues here for some of the big infrastructure projects in New Zealand, is we've tried to, I know it's popular, pull in some of the agile processes to try and resolve that in a very fast way, because the old method of sort of serve and volley around plans and projects with your customers and your clients, which is, here's my plan, you serve it over, they think about it for a couple of months and come back and say, we like that, but we hate all that stuff. And then you go back for another 3 months of planning and responding. It just chews up too much time. So we basically just chopped everyone in a room and said, you can't kind of leave. Here are the big things we need you to decide upon, but you need to have the authority to decide for your company as a customer of ours, because we're heading down some big decisions. And it actually forced a different level of collaboration, which I think is there's some clues in there about infrastructure projects which are notoriously hard, expensive and complicated, that we have to change as a country to get after these things better for the future.
That's interesting, because there's a question here, and you might not want to comment on it. Would the proposed light rail have been a material impact on your car parking business? Now, I know that's being put on the back blocks at the moment, but but is that something you work with?
Yeah, totally. Yeah, work closely with NZTA and AT on, and actually we see it as really important. And in fact, our view is we cannot grow and continue to support the growth of aviation into New Zealand without mass transit. And so we've been careful not to get stuck into the slightly religious debate around which is the best mode of mass transit, because we're not experts. Having said that, we did go and employ some experts from overseas when we were doing our infrastructure planning, who've done light rail in Germany and other places, because we had to get a sense of, if it is light rail, then what does the geometry of the thing look like? How does it get around our runway? So we did that work ourselves. But look, we believe strongly in mass transit as being part of the answer for the city. And in fact, two of the projects we've continued on with, even under these circumstances, are putting mass transit lanes from both the south and the north into the airport, because we believe it's important. So our plans allow for light rail. They originally allowed for heavy rail, then that changed, but we actually have a detailed plan of how light rail gets into our terminal.
Okay. Someone here, you suggested rapid testing was key. What about contact testing? Do you have confidence that New Zealand has optimised contact tracing? Any idea why the Ministry of Health hasn't engaged more around the COVID card? It's very interesting. It might be out of your remit, really.
No, a little bit like probably everyone on the call. I spend way too much time thinking about this and sort of reading on this. But look, I'm not close enough to know. But my view on this is, again, there is no single bullet way to solve this.
Yeah.
Manual tracing is clearly a critical part of it, but it has scale limitations, right? And we know that. If we are going to be living with this thing, and I actually think COVID is possibly a trial run for something that will be potentially way worse in the future. With future pandemics that could be far more deadly than COVID, we have to use this time to set up for the long term. So we have to use technology, whether it's COVID cards or other things, in a smarter way to deal with this. And we should be going after that really, really hard, in my view, because we have to find a scale way to do it. And if it has privacy implications, so be it. Let's have that conversation. I think the alternative is people give up a lot of freedoms anyway in the alternative. And I think it also doesn't have to. I have a feeling that part of the COVID card resistance was could you get it at scale across an entire country? I actually don't think you have to do that. I actually think if you said, right, all employers in New Zealand signs up to a pledge that they will ask all their employees to use, it could be a little bit like the app on the phone, or take a COVID card like we have security cards to get into buildings, and we'll just all use it. I said to some of the people looking at COVID card, well, what about if we just mandated everyone who comes to the airport already carries a security card, you have to have it. What about if we said you all have to have COVID cards? It suddenly brings pools of populations to a point where contact tracing can happen in an instant. Then you said it, and all, go to foodstuffs and progs and said, right, if you go to a supermarket, you have to carry it. You start to pick out populations, and it adds scale to manual tracing. Look, I'm not an expert on it, but my sense is, again, if we're searching for one answer, it's the wrong way to go about it. You have to have layers. And I've been using the analogy, I've been describing it as domestic health security. And I've been using the analogy that at airports, we have biosecurity with MPI, Biosecurity in New Zealand. We have aviation physical security with Aviation Security in New Zealand. We have customs and immigration, which is people security. And every one of those layers of security operates with a combination of people, technology, process, and intelligence to provide a level of comfort that allows us to go travelling. Because frankly, without all of that, none of us would travel. We wouldn't have the confidence to do it. That's right, yeah. So if you adopt that same philosophy of layers of security gives an overall sense of comfort, then we should be applying the same philosophy to domestic health security and going after it with that kind of view, because that is how you mitigate risk. And there is no situation where there is zero risk in life, and you have to manage for that scenario.
Makes huge sense. Believe it or not, that takes us to 10 o'clock, an hour's gone. Adrian, look, thank you very much for giving us an insight. One thing just to wrap up, we talk at BDO about this whole Rethink framework from the reset, which I think people have done through level 4 and 3. We're in a resilience, building resilience around our businesses, pivoting, looking at all sorts of opportunities, investment, cutting costs. I think most businesses have cut costs now. It's now about actually looking at your forecast. But the next step, and really, is to get back into the bigger, wider strategy, is the realise. Get back onto growing your business again. Where do you see for Auckland Airport? Where does that realise? You're still in the resilience phase.
Look, we are, and for us, it really focuses on getting fuel in the aviation machine, and that's why we're spending so much time and energy trying to get domestic going and making that safe.
Right.
Focusing on gradually restarting individual markets over time, because we are essentially rebuilding a market that had built over 50 years. We're doing it on a bilateral basis almost. So that is the single most important thing we can do for our business, but also I think for the country. So that's where our time and energy goes. And ultimately, we want to be in a position where I think New Zealand can trade off the benefits that its reputation has gained from the management of COVID so far, because I think I have a very optimistic view on the future for New Zealand. Our distance has been our enemy over the last 100 years. I think it's actually going to be our advantage.
Yeah, I agree.
Years ahead with high-speed connectivity, international travel markets reconnecting us, and export-import, arrangements. So, let's get our country back in a position where we can trade off that and pay off the check we've all written in the last few months.
Yeah, which has been a big check, but unfortunately going in out of 3 and 2 doesn't help your business model.
If we can get domestic going, that will be a critical catalyst for keeping people in jobs, keeping pilots flying, keeping crews going, and that means our system, because it's a system of parts, is ready to recover.
Yeah.
I fear that if we can't get some consistency there, the system starts to wither, and then I start to be concerned about skills, safety, and frankly the smaller parts of New Zealand who depend so heavily on tourism for the resilience and the connectivity that brings.
Hey, look, thank you very much. One thing that I'll take away, it's a term that I haven't used before, and I think it's something for clients to think about, is the serve and volley. So I haven't heard that before. I think we do that so often. We write a strategy, we send it out, and people do. They volley it back after a couple of months and go, well, yeah, we don't like this or that. And I think the strategies of today need to pull all the people in, and we don't leave this room until we agree.
Exactly right.
I like that. Forget the serve and volley. I'm a great fan of tennis anyway, and I always say, don't watch the scoreboard, just keep playing the game. The scoreboard will look after itself.
Exactly right.
Thank you very much, Adrian. To everyone out there, thank you very much for participating in the past hour. Our next session, 2 weeks away, is Sam Johnson. It'll be up there in front of you now. I look forward to your participation at the next one. Thanks very much. Thank you, Adrian. Thanks.
Cheers.